What's going on, everybody? Welcome back to my YouTube channel. So I wanted to share something with you that has really helped transform my trading. Now, going into the weekend, I like to leave these videos to the end of the week so that you can backtest this, get yourself hyped up and ready for next week. I hope everybody's had a great trading week, and if you haven't, I hope you can pick your head up and get yourself back for next week. So let's just take a quick look at this. Now, it's a very powerful trading exercise that you can use, and it's something that I teach all of my members. I personally have applied for a very long time in my trading, and I want to share this with you. Now, each candle that's formed on the charts, whether it be a candle to the downside, a candle to the upside, a candle that ends up leaving a strong wick behind, or an indecision candle that ends up leaving wicks to both sides, tells a story. Now, what you need to focus on as a trader is when you take a trade, you are never going to know when you're going to hit take profit. It doesn't matter whether the trend is to the downside, whether the trend is to the upside, whether structures creating the most cleanest of structures with higher highs and higher lows. When you take a trade, you will never know if that trade is going to hit take profit or not. But what you can do is take a trade in line with the trend that the probabilities of the market going in your direction are going to be just a little bit higher. Let's say a 51% chance more of going in your direction than not. Now, when the candles form on the chart, you have to understand, as I said already, they create a story. So if the market, let's say, is in a downtrend, and you can see that it's created a really strong bearish candle to the downside. Now, I'm not here promoting any candle formations per se, but I'm just saying get the overall picture of what I'm trying to illustrate here, that if we're in a downtrend and we create a strong bearish candle to the downside, if you had one chance, just one chance to make a decision on where you was going to put your last ever trade. So the trend is down and the strong bearish candle is to the downside, or the last candle is to the downside, and you had one chance to place a trade. Are you going to take a buy, or are you going to take a sell? Now, for those that said sell, very well done. For those that were a bit skeptical and like, well, I don't know what this is doing and that's doing, that wasn't the reason for me asking you the question. Don't think about it too much. Most people will say the next candle would be bearish. Now, why is this relevant to what I'm telling you now? Well, this is the power of identifying the range or potential range of the next candle. Because once you're able to identify, and this should be done first thing in the morning, what structure the market is in, what the formation of the structure is creating, and then going down to your lower time frames to start looking for behavior, and then looking for your patterns. So if we've decided, let's say from London Open, that the market structure is down and it's building really nice lower lows and lower highs, and we decide now to start scaling down to our entry time frames, and we start seeing really good patterns or structure forming, looking at price breaking structure, looking for those retests, and then you see a strong bearish candle to the downside that takes out a structural low, and then you say to yourself, wow, this is an opportunity or potential opportunity, but now I'm not sure what I want to do. But you have to say to yourself, well, if I was to place the trade, where would I put my money? And the likelihood of the next candle is going down because of how the market is built up. So if the next candle is likely to go down, then I'm better off taking sells than I am trying to overthink anything and start to now dissect the market, going back to 8 months worth of data and be like, oh, this is now support level and the trend line to the upside on the weekly is going up, etc., etc. You don't want to do that as a trader, because the more decisions you have to make and the more complicated you make things, the more decisions you're going to have to make. So this is why I use this approach to the market along with my trend trading, market structure and behavioral strategy. I identify simply what the next candle could be. So if we take a look at pound USD on the hourly time frame, let's take a look at the structure of how this market is building. So we can clearly see that the structure of this market from this point is moving to the upside, right? Now, we have a level in the market where price wasn't really breaking above for a long period of time. Now, once this candle here decided to break to the upside and take out this high. If I was to ask you, okay, if I was to ask you what would the next candle be, where are you putting your money? This is what I need you to think about. Where are you putting your money? You have one trade left. Are you taking a sell after you see that the trend is up and now we've broken out of this structural high? Or are you taking a buy? Well, most people will say I'm taking a buy. So let's continue to see how this works. Price starts to push to the upside. We can see multiple wick rejections in and around this level here. Now, when we look left slightly, what can we see? Price is failing to break above a structural high. So if we look at this and then we see the reaction of this strong bearish candle to the downside, if you had one chance to take a trade, would it be a buy or a sell based on this market structure and the behavior? Most people would say sell. Now, we know how structure forms. Structure creates lower lows and lower highs and eventually continues down to make lower lows. So if we're looking at the structure of this market, we can see a strong pullback. We see a major wick rejection. Moving on to the next candle after this behavior is played out, and you see this wick rejection, and you continue to see this indecision, and you see the strong bearish candle to the downside. Based on the fact that the trend has now been broken, price was not able to make a new high. We had a strong shift in momentum based on structure, a push phase, exhaustion phase, a lower high forming, and then a strong bearish candle to the downside. If you had one chance to take a trade, where are you putting your money? On buys or sells? Most people would say sells. Now you might be saying to yourself, well, Rox, what's the point in this? What are you trying to illustrate? Well, just as we highlighted over here, candles create different formations. They tell a story. If we identify that the trend is down and we take a sell, we don't know if we're going to hit take profit or not. But what we can identify is based on the market structure and behavior that if we have a strong bearish candle to the downside and based on the theory that we have only one trade to take, then where is the next candle going? If we say down and take a sell, then more than likely we increase our probabilities of winning that trade. Even if it's just by 1%, 51%, then guess what? The odds of us making money in the long run are going to increase dramatically. Now, back to the point that I made in the beginning. If we take a trade, we never know if it's going to win. But let's say the hourly candle pushed to the downside really strong. Understand that every candle has a range. Now, we don't know how much the range of each candle is going to push, but we know overall, from a logical perspective, just looking at the candles on the chart, that let's say for this instance, pound USD makes a range of this much. Doesn't matter about pips, just look, this much, visual perspective, this much. If the trend of the structure is down, the previous hourly candle is strong bearish, and we have one chance to take a trade, are you going to take buys or sells? If most people say sells, then what can we anticipate will happen next? Well, we can anticipate that the next candle potentially will be a strong bearish candle to the downside. Now, what does that do for our chances? Or what does that do for our trading? Well, that significantly, let's move this up a bit so we can highlight the point and move this down a bit. This significantly increases our chances of getting to break even. Because again, we don't know if we're going to hit take profit, but what we do know is now we have a risk-free trade based on a simple two-candle approach to the markets where we anticipated the next candle to be bearish based on the previous candle and the structure of the market, and now we have a risk-free trade. Now, I hope I'm making sense because I do ramble on a lot, but we're going to see an example here. Look at the structure of this market. We see that the structure of the market was to the upside. We have a very strong bearish break to the downside. And here now we have a structural high where price is failing to break above and a structural low where price is failing to break below. Now, overall, the market sentiment is down, but at this moment in time, the market is showing a lot of indecision. So what are we waiting for? Well, we're just sitting patiently and we're waiting for the market to show signs of momentum. Now, based on this information, we see a break of this consolidation that hasn't been broken for, let's say, about 9 hours now. And now we can see a break. With the overall trend to the upside being violated and now price taken out this previous structural low in and around this area, we can now anticipate what? That the next candle is more likely to be bearish than it is to be bullish. So now what do we do? Well, we're going to scale down to our entry time frame, which in this occasion is the 15-minute time frame, and we are waiting for our break and retest patterns to develop. That's it. That's how we trade, break and retest. So now looking at this, we're not taking a trade yet because at the moment the market is in a strong push phase. So we are just simply waiting patiently for the market to come back, create a retest of this structure, and based on the information that we've gathered from our higher time frames, we are planning to take a trade when the market signifies your signal entry, whatever that may be. Stop loss above structure, 1 to 3 risk to reward ratio trade, and then we just take the trade. The aim is not to win this trade as much as we want to, and I know it may sound ludicrous, but the aim right now is just to see if we can get this trade to break even. And as you can clearly see, we would have got this trade to break even. We saw the previous hourly candle was strong, bearish, in line with the trend line break, in line with a strong momentum candle to the downside. And as you can see now, let's move this over, the market is moving in our direction. And this is how you want to be trading. Now, granted, right here, this is a bit of a bummer, but we're at break even now, and we let this one run out. So I hope this was useful. Try it over the weekend. Drop your comments below. Let me know what you think of it. And as I always say, if you've enjoyed this video, please smash that like button, subscribe, and until next time, take care.